So what's next for the 2025 housing market? Here's what Lawrence Yoon, Chief Economist of the National Association of REALTORS, and NAR's Deputy Chief Economist, Jessica Lautz, had to say. The forecast for the housing market is much more promising, with an outlook for a higher number of home sales and moderating mortgage rates. They also shared new NAR data that looked at who's buying homes today. On the selling side, homeowners are feeling richer from the rapidly rising prices of the past few years that have increased their equity positions, giving them more cash to buy the next home. Furthermore, with the conclusion of the presidential election and some uncertainty being removed, consumers are coming back out and doing business. Here's an overview of NAR's predictions and their reasoning on key housing indicators for the next couple of years. It's predicted that the number of existing home sales in 2025 will rise 9% over 2024, and newly constructed home sales will jump by 11%. Mortgage rates will have a major bearing on how the housing market will fare. According to Freddie Mac, the average 30-year fixed-rate mortgage has ranged from 6.08% to 7.44% over the past year. It's predicted that rates should stabilize at the low end of that range for 2025. Recently, the Fed Reserve announced its second rate cut of the year, reducing its short-term benchmark rate by a quarter point. The Fed is anticipated to reduce its interest rate an additional 4 times over the next year. Unfortunately, hopeful buyers who may be waiting for lower rates likely won't see that anytime soon. Mortgage rates will not decline at the same pace as the Fed rate cut. Why? It's because of the large budget deficit. There's less mortgage money available because the government is borrowing so much. A large budget deficit will prevent mortgage rates from going down. Factors that could change that forecast are as follows. 1, a reduction in the budget deficit. 2, an easing of housing regulations that would allow builders to build more homes. And 3, a significant increase in the labor force to help lower inflationary pressures. Then we have the locked-in effect of homeowners who do not want to give up their 2 or 3% mortgage rates from recent years. This will lessen over time, giving way to pent-up inventory being released due to the 3.5 million new babies being born each year, the 1.5 million marriages, the 700,000 divorces, the 3.5 million people turning 65, and the 25 million job changes that take place over each year. All are milestones that trigger real estate moves. So while homeowners have enjoyed record-breaking equity gains, home buyers have been struggling with affordability. Nationally, a typical homeowner has accumulated $147,000 in housing wealth over the last 5 years. As a result, the spread in median net worth between homeowners and renters continues to grow. The strong price increases of recent years are not sustainable. If they continue another 5 years, America will be divided, with only a few getting to experience the wealth-building opportunities of home ownership. If we bring more supply to the housing market, home price increases will not be as outrageous and should be more in line with wages. A more modest increase of 2% is expected in 2025 over 2024. The sizable housing equity gains many homeowners have experienced, all cash buyers have surged to record highs, accounting for 26% of home sales over the past year. The median age of a first-time home buyer was 38, an all-time high. This is due to needing to save for a longer period of time before buying. Also, the number of multi-generational households has surged to an all-time high of 17% over the past year. The number one reason for cost savings, people are combining incomes in order to afford home ownership. They're also buying a multi-generational home to take care of aging parents or because young adults are moving back home. A drop in marriage rates has also triggered more consumers to enter the housing market on their own. Single women held a 24% share of the home purchases over the past year. Single men was 11%. For more details, take a look at the article below, and I hope you enjoyed this update.